Welcome to Multifamily Rockstars. If you are new to apartment investing or already experienced, you will enjoy this show. You will hear from the leading experts in multifamily real estate so that you can be a better owner, operator, and investor. Real people, real stories, life-changing. And now, your host, Ryan Christopher Nunes.
Well, welcome to today's show. Today's guest is Gary Lipsky. Gary is a real estate entrepreneur with a focus on multifamily syndications. His company, Break of Day Capital, has $65 million of assets under management. He is the host of the Real Estate Asset Management Podcast, the author of Best in Class, and the founder of the Asset Management Summit. Gary, welcome to the show.
Yeah, thanks for having me, Ryan.
Absolutely. Thanks for being here. So let's jump right in. Gary, walk us through your background.
Yeah, so I grew up in New Jersey, just like you. Lifelong entrepreneur. You know, during the winters, I would shovel driveways. During the summer, I would detail cars. During college, we had a restaurant delivery service, kind of like a DoorDash and a Postmates, like they have now. Obviously, I didn't have that vision, but we pulled that off. And in my 20s, I co-produced 3 low-budget independent films. And I started investing in real estate at that time, but I didn't go into it full time. I started an after school outdoor ed and leadership development company in Southern California. And I sold that at the end of 2016. We had over 700 employees, another 700 independent contractors. And I love what we were doing, but I was ready for my next challenge. And I really loved real estate. I loved the creative and the business side. And so I wanted to try my hand at that. And I just learned as much as I could and started investing in other people's deals and then started doing my own deals.
That's awesome. So you recently wrote a book and I see the cover behind you there. So tell us about it.
Yeah, there's a lot of talk out there about getting your first deal, but very little talk about what you do after you get that deal. And we wanted to walk someone through that journey. And so from due diligence to renovation management to, dealing with your property manager, all the way through disposition. And so we put everything that we knew on paper, also all the things that we learned from our podcast. And it also pushed us to be better operators too, by putting it all down on paper. It forced us to tighten up some of our operations, and anyone can use it as kind of like a Bible for asset management. They could go to certain chapters that they want to review or understand, and they can also go to our website where we have a lot of free resources in regards to the book as well.
Awesome. So, I know your asset management podcast and your book, obviously that's all focused on asset management. So share with us the 5 tips that you've learned from your journey.
Yeah. Measure everything. Because if you can measure it, you can manage it. You could see improvements along the way. So measuring data is so important and breaking it down. Don't look at it as a whole. So let's say you've got a vacancy. You're not looking at the property's vacancy as a whole. I want to know what different types of units, the 1+1s are some renovated, some not renovated, what, different sizes, what's the vacancy, what's the occupancy per each one. So I can make adjustments. Maybe I can raise a rent on pretty much every single unit except one unit type that's not doing well. So breaking it down really makes me be able to make more informed, better decisions. So that's one. Also, we use Google Docs to track everything, and for everyone to see it and have access to it. And we write down everyone's name for each task when it's due, and that holds everyone accountable, because you don't want to be the one when we come back to our weekly meeting to have not done the task that you're supposed to do. So the Google Docs is great to hold people accountable and to, for people to go back and remember, because, someone might be on the phone and not have access to it while we're there, or jotting notes on a piece of paper that's going to get lost. So those Google Docs are so important. We also like to do surprise visits. we're not going to tell our property manager we're coming by every time. We want to see what the property really looks like when they know we're not coming, and quite honestly, there have been times where we've been very disappointed. We've had a property manager that we've had to fire because she says, one thing and it's not getting done. And when we go to the property, she's making excuses or lying about it. And it's very unfortunate, but that's just not tolerable. If there was a reason why it didn't get done, then let's talk it through, and that's fine. But don't tell us it's done when it's not done. So doing those spot checks is really worthwhile, and not just during the day. We'll go by at night, and I know sometimes people only go during the day. Go at different times of the day. You'll be surprised what you see, and you want to make sure the property is as you expect it to be run. It's KPIs that we do. So we connect with the software with our property management company, so that we're able to get the data that we need. Let's say for marketing, so we could see where people found out about us and where we converted. Most importantly, where we converted, because we can get a ton of traffic. I think for one of our properties, like Apartment Guide, we got the most leads by far, but we weren't converting those leads, so it wasn't really qualifiable tenants. One other, I think it was Craigslist, that we were getting a lot more conversion. And now we also needed to see a bigger data to see, if it still made sense if we took from 10 leads, make it 50, 50. So that's really important, tracking everything, because marketing, you can spend so much money, and if you're not tracking every single, not only the lead, but conversion the whole way through, you just don't know. And so it actually goes back to one of my first point about breaking everything down. Number 5, incentivize your staff. You've got to make them, you've got to celebrate the wins with them and make sure they're a part of it, because without, on these big properties, you're having full-time staff, and you've got to keep them motivated. And if they're bringing in $10, $20, $30,000 of NOI or more, that's huge when you go to sell it. So you want to make sure that they are able to participate in some of that upside that you're going to be achieving for yourself and for your investors. And it doesn't have to cost you much, but a little bit goes a long way.
No, awesome. Appreciate it. And so if we look at turnover, how do you keep your turnover low?
Yeah, that's a great question. Building that community is so important. If you're doing community events, and you don't have to have it all the time, but every quarter, if you're having something, you're building a sense of community. If the property is clean, that's really important. How your property manager talks to residents, and when you're walking the property with them, you could see that interaction. Or when residents come into the office, and if they're creating a friendly environment, people aren't going to leave over a 5% rent increase, because if they like where they're living. And so that's really important. So you need a really good property manager to stay on top of that, to create that community feel.
Awesome. If for your asset management calls, what's the agenda and how long are those calls?
Yeah, it all starts with the information that they said to us ahead of time. We have a very detailed worksheet that they fill out as far as new leases, month to month, collections, traffic, all these different data points that we look for ahead of time. And so that can shorten our phone calls. Because we know exactly what to ask. We're not asking all the basic information. We already have that ahead of time. So on a stabilized property, it might be 20 minutes. It could be less. On a new property, it's probably going to take 35, 45 minutes typically, as we continue to work things, and there's CapEx and we learn new things about the property. We uncover some of the bodies that have been buried. So it's definitely going to be longer in the beginning, and if there's any issues, it's going to be longer. But typically, once we get rolling, it could be 20 minutes.
Got it.
And you asked the agenda. Yeah. So really, we want to talk about any wins, any losses, and losses. We're talking about crime, any issues. Those are the key points. And then we're always trying to be many months ahead, and that works on our renewals and everything else. So we're always trying to stay ahead of the game, so that if something does, a Texas freeze happens or COVID happens, our property is performing really well, and so we could take a little punch if something bad happens. So always being ahead of the game, and we're not focused on necessarily that very day unless there's an issue, but we're talking weeks, months in advance.
Awesome. How do you use technology in your business?
Yeah, Google Drive is one of the things that we use a lot. We also like a Trello. Again, it's free too. And so we'll use that for the renos typically, and for a lot of the tasks that our property manager has. And it's really easy to use. You just move it along from like to-do list, work in progress to finished, and you can put the details on it. So we like that. We do use some WhatsApp as well, but I'd say we use Google Drive the most, and then the Trello and Google Drive. Everyone can have access to whatever they need, and it's there. It's easily they can easily find it, which is great, because we want to be able to share that information in a nice place for everyone.
Awesome. So you live in California, right? And so you buy in Arizona, and I think at one point you're hosting a meetup in Arizona. Is that correct? Okay.
Yeah.
Are you still doing that with COVID?
We don't. We were combining the meetups online, which was great. We probably won't go back to the regular meetup, but we were out there pretty much every other week. So we figured, hey, we'll just add the meetup at the end of the day, 7:00, take the last flight out. And it was great to connect with people investing in the Phoenix and Tucson markets, or people that wanted to invest. So it was just a nice thing to do. At the end of the day, we'd have some food and some great networking. But getting to Phoenix is a 5-hour drive with no traffic, or an hour flight. Okay. So it's easy to get to. Southwest is really cheap to get there. We jump on a rental car and we're off and running. And I mean, long days. I mean, we'll usually take 7 a.m. flight, get there and off and running, and could see 10. I think one day we saw maybe 15 properties, and that's visiting some of our own properties as well. And okay. Take the last flight out, and it's one long day, or stay over if we have a lot of work to do. But it's just part of the job.
How do you feel about the Arizona markets now? Are you still bullish?
Oh, yeah, very bullish. I mean, the cap rates have definitely compressed quite a bit, and so it's great when you're selling. We sold one property already, and we're in escrow to sell another property for great returns for our investors. But fighting to get another deal. I've been in a bunch of best and finals. I think there's so much more room to go in Phoenix and Tucson, because when you look at the data with the population growth, the job growth, the rent growth, although the rents can't keep going up as crazy as they have been, I just think multifamily, workforce housing in those areas will continue to be a great asset class to invest in. It's like you had said earlier on my podcast, it's about buying right. You got to make sure you're buying right, and not just overbidding just to get a deal. I'm never gonna chase a deal just to say I've got a deal. It's not worth it to me and my investors. It's gotta make sense.
No, that's absolutely true. So you recently bought an office asset and converting it to multifamily. So tell us about that.
Yeah. So the property looks like multifamily, garden office. So that was the first thing that attracted to us. And obviously, when you're shopping for a property in Phoenix and you're seeing, 1980s product go, we're selling ours for well over $200,000 a door.
Wow.
We saw this property and we got it for 1.9 million. And from that, we can create 40 units. Because originally it was gonna be 54, but we're taking down one building and we're gonna be building 64 new units. So, all in, we may be at 115 a door, and we could easily sell it for 175 a door. So it's just arbitrage, or we could buy it so cheaply. And this is in Youngtown, it's in the Phoenix metro, but not in the Phoenix city. So Youngtown City has been great to work with. We had one meeting after another with the mayor, with the city officials, and we didn't have to wait 2 months for red lines on plans. It was basically a few days. They gave us feedback and we made some adjustments per the fire department. And so it's been a great process so far. I mean, now we've got the hard work of, okay, now we've got to, start building it out and everything. We'll be starting in about 5 weeks. So it's almost like 3 phases. One, purchase the property and work on the plans. Then it's the renovation and stabilization of the current units, and then the new build, which will be adding 64 units. So at the end of the day, we'll have 104 total units.
That's awesome. That's true value add. How did you find that deal?
Yeah, this is, we had been looking at hotel conversions and just weren't finding everything. So we're just any broker, any person that we can get in touch with, and one person led to another person. This is a guy that he was actually looking to sell this deal for quite a while. It had been sitting on the market, but we thought it was well worth, the value that we were getting. So we snapped it up, and we had a long escrow period, so we can make sure that we can actually do everything that we wanted to do. And like I said, the city was great, and right from the bat, the zoning for it was commercial residential, and so it already was zoned correctly for us. But just it wasn't like a major broker; it was a guy like wholesaling the deal that we kind of stumbled upon randomly.
That's awesome.
But,
that's great.
Yeah, you just got to put so many fillers out there, and you never know where your deal is going to come from,
For sure. No, that's a good point. Let's turn to capital raising. So what's your strategy for building your investor database?
Yeah, first off, doing good deals, because we've done good deals and my investors come back each time, and they typically bring another person or two and say, hey, I heard you do, you have great communication, you're conservative underwriting, you do what you do what you say you're going to do. And so that helps build my database. Then also there's that social media aspect. So I have a podcast, we had our summit, certainly the book, it just lends credibility. But at the end of the day, you have to do good deals, because there's a lot of people on social media. Some are doing good deals and some aren't. So my advice to investors out there is vet your sponsor and make sure, just because they're on social media doesn't mean they're doing good deals.
So you mentioned vet your sponsors. So, part of that is even for you, how do you choose, what partners you partner with, Gary?
Yeah, it's a good question. You want to get to know them beforehand, because I see a lot of shotgun marriages out there, people that need to raise money, and they're jumping into bed with people that they may not know them well enough, and they might not be doing things the right way. So you've got to make sure you develop a relationship with people. There's whether it's through meetups and conferences and whatnot, going to lunch with someone, spending time with that person, do they have the same values as you? Are they gonna, if you have to take a punch, are they gonna put their money in, or are they gonna run away? These are very important questions that you need to figure out. So you do your due diligence on your partners, to do a background check. For $50, $75, it's well worth it. Have they had any bankruptcies or criminal issues? And even if they do, they might be a very reasonable explanation for that. But you have to you have to be willing to dig deep on your partners, because they're a reflection of you. You're taking other people's money, and you need to protect that. You have a fiduciary responsibility to really do a well-rounded background check on your partners.
Well said. So as we wrap up, what advice do you have for people getting into the business?
Yeah, don't be afraid to talk to other people. I love everyone's willing to share information for the most part in this industry, which is really nice. It helped my growth, and I continue to learn from other people sharing their information. And so don't be afraid to reach out and ask questions. Use your network, find a mentor. That really helps rocket fuel. You don't want to make the same mistakes as someone else. If you find a mentor, you could leapfrog those mistakes and not make the same ones. So definitely reach out, and never stop learning. Like I said, I'm continually learning new things, and the business continues to evolve and change. So never stop learning.
Awesome. How can our listeners get in touch with you?
Yeah, you can go to our website, breakofdaycapital.com. Email me, Gary, at breakofdaycapital.com, Facebook, LinkedIn, Instagram. Please connect. Love to talk real estate.
Awesome. Gary, thank you so much for your time.
I appreciate it.
Thank you for listening to Multifamily Rockstars. We hope this episode was helpful for your personal and professional growth. For more episodes and to learn more about investing in multifamily apartments, check out lifechangingcapital.com.